YouTube? It's your boy, Only Traders, and we're back with another video, man. And throughout this video, I'm just gonna be walking and trying to explain to you guys a concept that has helped me a lot, and that's key levels. And it's also gonna go into depth of why I don't use support and resistance for my trading. Because for me, I learned a strategy where I could identify my key levels and use those as my support and resistance. So due to the fact that I use my key levels as my support and resistance, I avoid a lot of ranges and I avoid a lot of trades where I'm not sure the probability of it going down, because I only trade when price gets to that key level. And if it's not at that key level, I do not take the trade. I'll further go into depth on this illustration on the charts, but for now, I just want to get the concept out there for you guys so you can exactly understand my thinking and how I view the key levels as one of the most important concepts that's going to really elevate your trading game. Because for me personally, it changed a lot from the way I approach trades, and it made me more patient and more disciplined. So with that being said, we're going to go on to the charts and I'm going to clearly illustrate to you everything from how I plot it to how I execute and how I look for structure and behavior on those key levels on higher time frames. And from there on, I scale down onto a lower time frame. And I look for my trades to execute, because I know that most large institutions and banks are trading from these levels, which is why when price is at a key level, it has one option. It's either it goes up or it goes down. But the difference is, at a key level, it's always easier to identify exactly where the breakout is going to occur and which direction it's going to go in. And all you have to do is join in on that. So with that being said, we're going to take it to the charts. Let's go. What is good, YouTube? It's your boy Only Trade, and I'm back again now on the charts, and I'm going to show you exactly the concept that I meant of key levels. And with that being said, we're going to start off at the 4-hour time frame. So we're going to start off at the 4-hour time frame. And the concept of this is that you go onto a higher time frame and you scale down onto lower time frames, and from there you're going to see how price action and market structure and market behavior occurs at the key levels that you plot on your higher time frame. So as you can see clearly, we're in an uptrend, and to make that more clear, I'll use the line chart. So as you can see, from this point on, we had a double bottom pattern that was created, and from there the market created a new trend, breaking above these highs and starting a new uptrend, and from there prices continue to go up. So now for us to plot our key levels, would go on and look for our most recent resistance, which is this. So this will be our first key level. We'll put a target price here for where we think price is going to go. Since we're in an uptrend, we expect us to go to the most recent resistance. And from there, we're going to plot our next key level, which will be our support, in anticipation that if price does reject this level and continue moving down, we have another target for where we think price is going to reach. So now we've plotted our key levels. So we did that by plotting at the most recent resistance and the most recent support. And from there on, we're going to scale down one time frame below, and that takes us to the 1-hour time frame. So now, as you can see on the 1-hour time frame, it's a bit more clear as to what is happening, and price began to exhaust as it got to this level, and now it's threatening to go down and begin a downwards trend. So at this key level, we would want to wait patiently and see how price reacts. So to see how price will react, either we will wait for a move in anticipation that price will continue to move down. As you can see right now,
the candles are bearish, the candles are red, and they're bearish, meaning that right now the best opportunities would be sell opportunities. However, we do know that price is in an uptrend and that could quickly change. So what I would like to see here as we scale down onto a smaller time frame is we'd like to see a candle closing below this level in anticipation that price is going to go down back to this key level. If not, we would like to see price to come up, break above, close above this resistance, and continue moving up in the direction that it was initially moving in. So from here, all that is required at this key level is just patience and discipline and waiting for your opportunity to come. When you come to the charts, you're not a lion. You're not out on the hunt looking for prey. No, you're an ambush predator. You're more of a snake, and you lay waiting still up until you see an opportunity to take a trade and to make some money. So, with that being said, what I would like to see here in anticipation for price to move down, if it is going to move down, is I would like to see it come back to this level and reject this level again. Therefore, it will create a double top pattern. And we can anticipate that price is going to go down because it's clearly showing us rejection there. But at this point in time, we can see that price is creating lows. And if we do close below this level, then there's a really good chance that price is going to continue down with volume towards this level. And the reason why I trade from these levels is that every time I saw myself taking trades within this range, I didn't know exactly where price was going. So probabilities were always against me. And as you can see from here earlier on, it looked like price was going to continue going up. But all of a sudden, once it got into this range, it started ranging, and then it went back down. It came back up, ranging again, went back down, came back to the key level, rejected the key level where there was this previous support, and continued moving up to our key level. So at these areas is where we'll be looking for our trading opportunities, and we'll be waiting patiently for price to come down to these levels for us to look for trading opportunities, to look for patterns, to look for behavior, to look for structure. So we're going to label this down as the no man's land area. So this is the no man's land area right here. In between these two key levels is a no man's land area. And I would advise that you do not take trades within this area due to the fact that probability is not in your favor, as you do not know exactly which way price is going to go, due to the fact that it's in this range and there are two key levels that price could possibly be attracted towards, meaning it could go either up or down. And the fact that there are a lot of supports and resistances in between this level is going to make it much harder for price to break through those levels and for you to take winning trades. So it's more of a gamble than an actual trade. But we do know that once price gets to these levels, we do know that from here we can patiently wait and see exactly what price is trying to do, and from there we can take a trade. And as you can see, once we got to this key level, most traders would have thought that since we're in an uptrend, we're going to continue moving up. But no, we got to a key level and now it's rejecting that key level, and now price is beginning to move down to create maybe a pullback before going back up. So as you can see, this is the no man's land area, and from here we would not want to be taking our trades. So the concept of these key levels can be used on any time frame. So if you're taking trades from the 5-minute time frame, I'd suggest you look at the 15-minute and the 30-minute time frame for structure and behavior, and maybe the 1 hour for your key levels. So the higher time frame, you scale down and you go back to a lower time frame, plotting your key levels on the higher time frame. On the 1 hour, 4 hour daily time frames are the best suitable time frames for you to take trades and for you to plot your key levels. So with that being said, we're just gonna wait and see how price plays out. But at this moment in time, we won't be taking the trade. The idea is to get more of the concept of how you'd plot your key levels and how you'd wait and anticipate market moves, patiently waiting at your key levels, waiting for price to reach your key levels and to break out of your key levels. In this case, you can see that price is ranging, so there wouldn't be a trade. We'd have to patiently wait for price to close below this level in anticipation that volume is gonna push it down. But it's a risky trade due to the fact that we are in an uptrend. So at the same time, we can always wait for price to get back to this resistance, close above, and take the trade from there. And in anticipation that we're going to reach our target, which is the next resistance. And as you can see on the 4-hour time frame, that is this resistance. So we'll be anticipating that price will go from this key level to this key level. With that being said, deuces.